The other thing is the way you articulate your message to the target audience. I mean, the typical pitch of a biotech company sounds like, well, I have a product or I have technology, I need money.
Mm-hmm.
Investors are not in the business of giving monies to the companies.
Yeah.
They are in the business of taking money out, right? I mean, the only way you measure success with an investor is rate of return. And return
Because that's the outcome.
Take the money out, correct?
Yeah.
So unless you can articulate how the investor will make money
Mm-hmm.
or the strategic will generate value for their portfolio, you just don't resonate with the pitch. I need something from you, right? Nobody cares what you need.
Exactly.
The other
It's
thing
everywhere,
is also somewhat of a humility that is required in the sense that people invest into the teams rather than into the products. Because when you develop a product, things will go wrong.
Hello, everyone, and welcome to the Business of Learning podcast. My name is Joao Camargo, and my guest here today is Stan Glezer, who is the managing director of Outcome Capital. Stan, thank you so much for being here today. I'm really, really excited for this conversation.
Yeah, thanks for inviting me. It's a pleasure.
Why don't we start off, Stan, with you just telling everyone a little bit more about Outcome Capital, your role within the company, but also how you guys are a little bit different than most companies within your industry, which I found super, super exciting when you were having your first conversation with me.
Sure. So Outcome Capital is a life sciences specialized investment bank and strategic advisory firm. We operate only in life sciences, human life sciences, actually. So we work with the pharma, biotech, medtech, CROs, CDMOs, consultancies, diagnostic companies, and so on. And we are fully FINRA licensed, so we do full range of transactions, anything from fundraising to M&A, licensing, partnering, asset deals, and so on. What makes us different is that we are actually an investment bank and a strategic advisory firm. And the reason here is that, as usual, strategy should precede execution, right? And what we do is we first engage with the firms looking at their R&D plans, looking at their IP, looking at their market access, commercialization, whatever. Mm-hmm. And then we rebuild it into what we call path to liquidity. So basically trying to see where on this journey the company will experience value inflection points. Mm-hmm. And then from there, we can work backward, trying to see how much time will it take to get there, what kind of resources, competencies, manpower, money, and so on will the companies require, how much risk is associated, which then allows us to see what would be the right counterparts for the company.
Yeah.
And that is something that sets us up for success in the actual investment banking activity, due diligence, closing, and so on. Yeah. And then the reason why we're capable of doing it is that we're a bit unusual in that we're an investment bank that doesn't hire investment bankers. Pretty much all the managing directors in the firm come from life sciences industry with 25, 30 years experience as CEOs, heads of R&D, heads of investor relations, and so on. So we actually understand the business from the inside, both on the buy side and on the sell side of things. So that's what allows us to have a look as to what the client is doing and what does it take them to get from point A to point B, because we have done it ourselves multiple times.
Yeah, no, that's so awesome. Thank you so much for sharing that. And what I find so cool, and to someone who might be listening to this right now, it might seem, oh yeah, of course you need to have that guidance and not just the money coming in. But that's most of the times not how it works, right? It's just a bunch of money getting put into so much of these companies, and then not much guidance on how to actually guide that capital, depending on obviously what's going on. But it would only make sense that there's the experience side of things, but also showing you, hey, here's everything that you need to do and the steps you need to take to make sure that this capital is utilized in the best way possible to then achieve the outcomes, however many years down the line, which is getting the company selling, IPO, whatever it might be. I believe you guys might just do exiting, and if I'm incorrect there, please let me know. But yeah, it's so cool to understand that a little bit further. And I would love to actually ask something when you said the words working backwards. I think in entrepreneurship, we hear that all the time. It's like, hey, find out the goal and then take the steps backwards from there. What are some of the things that you really look for when you're going through that process of analyzing the entire situation and trying to work backwards from the goal?
Great. So look, the thing is, in the startup business and the investment, everybody's talking about exits, and you will every day see on the news, okay, that company was just sold for that many millions of dollars. Everybody gets excited. Okay, great. The thing is, statistically, those are rare events.
Mm-hmm.
If you think about the number of players in the life sciences sector, and everybody is thinking about the exit, and then you look at that denominator versus the number of news of people actually exiting, you're talking about fraction of the percentage.
Yeah.
So the question then is, how do you increase probability of success? And what you need to do is you need to create optionality, right?
Yeah.
You might need to think about, okay, the exit might be, as you mentioned, through the IPO, but guess what? The past couple of years for IPOs and life sciences were disastrous. Over 90% of the IPOs actually failed, and there were just a handful of those. So if you ask me today, would I recommend anybody IPO as an exit? Probably not. I mean, if the climate changes a couple of years from now, yes, sure. You can exit to a strategic. Okay, perfect. But then you need to think about what are the strategics that you can exit to, and what are their priorities, and what's their willingness to take the company at a certain stage of development. So that kind of creates, okay, therefore we think that you can exit to a strategic at that time point, and that's the universe, right?
Yeah.
Conversely, the exit for an early stage investor might be the next round of financing. So the question is, when can you see a change in valuation of the company based on, let's say, present transactions, where you can say, okay, you know what, we will raise the next round, and therefore this is the value inflection point. So there are different ways of looking at it, and that's why I'm saying it's not a point-in-time event. We're looking at it as a journey where you have multiple opportunities to exit. Doesn't mean that you will use them, but it's clear what drives the value of the company going up disproportionately to the investment that was made into it.
Interesting. It sounds almost like the direction is always maintained where we're trying to go, but the difference, I'll call it the bus stops along the way, can
Correct.
can be always differing. Interesting. That's really cool to understand it in that sense. What do you think are some of the biggest mistakes a lot of these companies make as they're trying to get to a point where they're going to liquidate, but that doesn't allow them to, because of maybe certain things that they implement internally in their systems, maybe because of how they approach doing the business development, maybe it's the sales, anything along those lines that you think is a common pattern or a mistake that you see that so many companies commit that doesn't allow them to reach their goals?
Right. So it's a loaded question, because the challenges in terms of exiting or securing additional investment come from multiple areas. Let me give you a few. One is a lack of clear value proposition. In our industry, a lot of the startups start with, an idea generated by a clinician or a researcher who then says, you know what, let me spin it out into a venture and start building the company around it. Great. But the value proposition sounds like this thing interacts with this receptor in that cell. Okay, this is interesting from the research and mechanistic perspective. It tells me nothing what it's going to do to the patient, to the healthcare system. How will it be reimbursed? What kind of pricing can I secure? I mean, none of that, right? So at some point, the company needs to transition from being enamored with the research and the science into what does it actually do as a business, right? And failure to articulate it, especially by the early stage CEOs, results in the lack of resonance with investors. The other thing is the way you articulate your message to the target audience. I mean, the typical pitch of a biotech company sounds like, well, I have a product or I have technology, I need money. Investors are not in the business of giving monies to the companies. They are in the business of taking money out, right? I mean, the only way you measure success with investor is rate of return, and return,
because that's the outcome.
The money out, correct?
Yeah.
So unless you can articulate how the investor will make money, or the strategic will generate value for their portfolio, you just don't resonate with the pitch. I need something from you, right? I mean, nobody cares what you need.
Exactly.
The other thing
everywhere.
is, is also somewhat of a humility that is required, in the sense that people invest into the teams rather than into the products. Because when you develop a product, things will go wrong. An A team will look at this saying, well, it's just a hurdle on the journey. Let's just, pivot and get going. A B team will fold and collapse there. So if you are an investor who wants to see a success, your primary filter is looking at the team and this advisors on the board rather than at the technology. Obviously, technology has to work, but that's not what's going to drive the decision.
Yeah.
And a lot of the companies do not appreciate that at the early stage, your best CEO is your scientist researcher who understands how to navigate through this. But once you get from the ideation into the development, you need to have leaders, whether this is a CEO or the C-suite, that knows how to do preclinical, that knows how to do clinical development, that knows how to navigate regulatory strategy, that knows how to navigate CMC, and so on. So if you don't have those people on board, you're not investable. And unfortunately, if you are in the pre-launch or launch phase, you need a commercial leader, right? So what happens is oftentimes very smart people coming from, as I said, clinical or academic settings think that they can figure it out. And they probably can, but the problem is they have never done it before. They'll make a lot of mistakes and they have no credibility.
Yeah.
So having humility to step down from the leadership role, or delegating to the C-suite executives who you bring on board and letting them run the show in those areas makes a world of a difference between the company that is investable versus not.
There's so many patterns of what you're saying right now, and from the hundreds of conversations that I've had, that's because it gets repeated over and over again in my head here. Especially that value proposition side of things is there's such a huge disconnect, not only for any investors, but also for the customers of a lot of these companies who don't really know what they're actually going to be getting from this thing. And then finally, what you just talked about right now is so interesting to me to hearing this over and over again, because there's so many organizations that don't seem to get that in their head. It's almost like they choose to ignore it. And it's like, hey, I'm holding on to this baby of mine that I've built and I'm trying to get to the next level. But sometimes they have to let go so that it can grow and get to the point where they do want to get to that they do want to get to.
And look, it comes back to the basic definition of leadership that I always refer to, right? A leader is not the person who can do things. A leader is a person who can build a team that will function without them as well as or better than with them. So, and that's where a lot of the startup CEOs, they do everything, right? They run the science, they change the bulbs, and they do the accounting. Okay, that happens. It's normal for the small startup. But as they progress and they grow, they are no longer evaluated on their science. They're now evaluated as a leader of the C-suite that they're building and the organization that they're building. And unless the person understands that transition, they will fail, inevitably. If they do understand it, then the question is that what they actually want to do with their life? Because if their whole life they were driven by the research, by discovery, by clinical practice, by all of those things, okay, great. Do they actually want to become a manager? And it's a very kind of, strong introspection that the person has to have. If that's what they want to do, great. So the question then becomes, can they be coached into this? Can they be trained? Can they learn it? Okay. If they can, fantastic. But if that's not what drives them, then maybe it's the time for them to step down, become a chief scientific officer, chief technology officer, whatever that is, and bring in the proper CEO.
Awesome. Very, very cool. Thank you for sharing that. I would love to shift the conversation here now, Stan, a little bit more into outcome capital itself. I think something that I always try to highlight in this podcast is that business, as much there are many rewards, oftentimes it's not just sunshines and rainbows. There's many things going on all the time, right? So I would love to ask you, what are some of the challenges when you're looking at outcome capital that can be obstacles in the way of your growth? Maybe you're looking to, maybe it's the revenue that you guys are trying to achieve, maybe it's the amount of clients that you're bringing on, whatever that might be. What are some of the challenges that can sometimes stand in the way that are just always knocking on your door in your day-to-day?
Sure. So, look, the success of the business, as you know, we just discussed, is a multifactorial thing, right? So I think what we have done right, we have assembled a strong team,
Mhm.
and that is the team that carries strong expertise. We have strong methodology. We have strong systems and processes. We have validated them. Um, and we know that if we do the things right, we will achieve certain amount of success.
Mhm.
However, we don't operate in isolation, right? The business is not about what you do inside. The business is what you do outside, right?
Yeah.
As I think Buffett said that, listen, every minute you don't spend with a customer, you're not selling.
Mhm. Mhm.
Um, and so we do have vast network of potential clients in the ecosystem, the companies that support them, whether those are accounting, legal firms, academic research organizations, CROs, and so on. So
Sure.
we do have this pretty well established. However, to all of this, there is context. And, for example, if I'm looking at the beginning of this year, capital markets were just not favorable to the life sciences investment.
Mhm.
It's just that simple, right? There are other opportunities. You look at the potential profitability of some of the tech companies, as in chips and AI, and you look at the opportunity with biotech. I mean, yeah, probably the chips and AI in this current moment will generate you faster and higher return, and that's how investors think, right?
Sure.
Because dollar is a dollar. You can put it into biotech, you can put it in the other sector.
Mhm.
So the sector itself was not necessarily favored by the capital markets in the past few months, and that obviously has the impact on the business.
Okay.
Um, at the same time, you need to think about the economics and regulatory and pricing pressures.
Mhm.
There has been a strong shift towards moving the manufacturing by the multinational companies into the US. Okay, that's great. That's job creation, that's new facilities, that infrastructure, but that money has to come from somewhere.
Mhm. Mhm.
So that means that the strategic players need to prioritize things towards building, new manufacturing capabilities and deprioritize some things that might be longer term impact, as in, for example, early stage acquisitions.
Yeah.
What that does is that venture capital firms that thought that they would exit their portfolio companies to the large strategics now think that maybe that's not going to happen or not going to happen as soon. So,
Mhm.
therefore, the available capital now is not being deployed towards bringing new companies into portfolio. It's being deployed towards sustaining existing companies for longer.
Huh.
So, those are the dynamics that obviously have impact on our ability to transact, on the amount of work that we need to put in
Yeah.
to actually get to a transaction, on the shape of the universe of counterparts that we're dealing with. So those are the things that, a dynamic market environment. And that's why we're saying when we come up with a value proposition, there is no prescribed recipe.
Yeah.
It's an alignment between what the company does, what sector dynamics are, and what market dynamics are.
Okay.
If you triangulate it, you will succeed. If you miss one of those components, it's not going to go anywhere.
That's so interesting. Let's say you had a magic wand, Stan, and you could just wave that and just get rid of one challenge. I know that there's oftentimes, as you said, it's completely dynamic. There's so many things, but just one challenge that right now would allow you to hit all the client acquisition goals, all those targets that you guys have for the company that you're trying to get to. Wave that wand, one thing gets solved. What do you want to solve?
So if I were to solve for one thing, I would say I would love to solve for the short-term focus of the investment community. Uh, because right now the investment community is in the state of uncertainty. And when the things are uncertain, you cannot plan for the future. So you start thinking very short term.
Hmm.
The industry that we are in does not operate on short-term deliverables because it takes years to develop a drug. It takes years to develop a medical device. You have multiple levels of risk from development, regulatory, market access, and other perspectives.
Mhm.
So you cannot approach it with, okay, what's going to be my return in the next quarter or in the next year? you need to think longer term. And, that probably is one thing that I would love to see rebalance, that, focus on the short versus long-term focus of the investors.
Awesome. I really, really like that. It gets people to really narrow down the vision to what actually matters, as opposed to the thing that seems to be the shiny object right in front of them. So I really like that a lot.
Right.
And I have one final question for you here, Stan, which is actually not a question from me. It's a question from my last guest to you, and they had no idea who you were. So,
Okay.
here's the question. You ready for it?
Go.
The question is, this is going to be a funny answer, I think. How long do you think it will take until your business is replaced by AI?
Eternity.
Mm.
So let me explain. For AI to function, you need to have rich, sizable data sets with high quality of data and correlation between the data and the future outcome.
Mm-hmm.
We operate in the industry where there is high degree of variability, very limited number of actually successful transactions, and high degree of imperfection of the data around them.
Mm-hmm. Mm-hmm.
What we do is an art.
Mm.
And this is where it becomes tricky to use a predictive model and, just say, hey, you know what, since a lot of things were happening that way, that's the next thing that's how it's going to. So there is just not enough of data to train AI to do what we do.
Mm-hmm.
Now, AI can be helpful as the support tool in some aspects of the activity, especially if you're looking at macroeconomic indicators.
Sure.
But in formulating the actual value proposition, conducting a negotiation with a counterpart, I mean, it takes a handshake and an eye to eye, and that I don't think that that's going to be replaced by AI in any foreseeable future.
Yeah, amazing. Stan, thank you so much for your time. This has been such an incredible and insightful conversation. Where should people go if they want to learn a little bit more about you, and of course, also a little bit more about Outcome Capital?
You go to our website, outcomecapital.com. You have a lot of information about the company and how we're operating. You can see our history of transactions over the past 15 years or so. But we also do spend a lot of time on actual methodology. So you will see a lot of publications in terms of the methodology behind investment banking, life sciences companies, the market dynamics, and so on. So if anybody is interested, not just in Outcome Capital, but in that field of work or activity, we do have a lot of resources that we have generated over time.
Amazing. I will try to leave as many links as I can down below here if you want to check that out. And if you enjoyed this conversation, you want to hear more conversations like this, please hit the subscribe button. And I will now need to get out of Stan's hair because he's trying to get rid of me. I'm kidding. Thank you so much, Stan. I really appreciate it.
Thank you. It was a pleasure.